Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. As you can see, this daily chart gives not a lot of changes since the last week. Most events have happened in the beginning of the week when the market has formed here some bullish context. In fact, it was the retesting of this confluence with the wash and rinse type of action and the bounce up. So, and in general, market keeps this ability to keep going higher. But we need to see how market will respond on the intraday charts. In general, this performance that we have on the daily, it remains bearish. So you can see, for instance, bearish. Here's we have the downside action and some flat standing above the strong support. And it shows that since trend is still bearish, it shows that the retracement in the scale of the weekly chart with this bounce from this important resistance, important targets is not over yet. So, and to understand what could happen, we need to see what market response follows from the last intraday support area. In general, here we have a bit tricky moments because overall context on the daily chart looks bearish, but the price action response on the support carries some risk that market could reverse up and show a bit deeper retracements, just because, as we said, if market will able to stay above these lows and starting upward action, it could lead for at least deeper upward pullback, maybe some even double bottom on hourly chart, something of that sort. And this ability market hasn't lost yet. But at the same time, by a cross-market analysis that we have, in a perspective of the few weeks, the chances that market still could show a bit deeper retracement still stands significant. So, for example, if you'll take a look at the euro currency, at the interest rates, you can see, for example, that on the euro currency we have bearish grabber on the weekly chart. It suggests the taking out of these lows, and it suggests some rising of the United States dollar. Second, on the 10-year yield, on the 10-year yield, you can see this fast action and the recent stop on the performance of the interest rates mostly stand because of the overbought situation on the monthly and actually on the weekly chart as well. So on the monthly and the weekly market stands overbought and overbought strongly. I have not even mentioned this ABC patching that recently has been completed by the 10-year yield with this acceleration of the city. So this type of the performance put the shadow on the bullish perspective on the gold market as well in the near term, as this creates some bearish pressure on the gold market. And finally, on the real interest rates, you could see that although they are not rising too much, but currently the barrel is floating around and above the 0 point, turned positive. Despite that, in the last session, it has returned back to the zero. In general, rising of the real interest rates, it's also, as you can see, makes a negative impact on the performance on the gold market. And that, in turn, makes us think that although maybe here we could get some bounce or something, in the longer term scale, within the week or maybe couple of weeks, chances that market will still keep going lower seems more significant than sharp, unexpected upward reversal. If, of course, any surprises we get from the geopolitical situation or somewhere of that sort, with the keep things equal as they stand right now, the balance stands in favor of the bears in the perspective of the couple of weeks. On the lower time frame, actually our trading plan mostly stands the same. On the 4 time frame chart, although we've got the grabber on Friday right here, but it was not able to trigger any upward action. It was erased by the release of the more or less positive non-farm payrolls numbers. And diversion still in place. Our major validation point is still in place. And that gives us just the final point in this bullish setup. If we'll take a look at the hourly chart, you could see this market hits the OP, but with this performance that we have, it seems the last bullish outpost stands around 1912, 1910 area. Why? Because this is XOP, this downside action, disagreement with the final 618 support. Market has to stay here and restart upward action. If this will not happen, market will breaks it down. It means that we should be ready for action to daily for our time frame XOP around 1850. So this is simple logic. So if market fails to hold short-term bullish context and start dropping, erasing all supports on the way down, this just tells that this setup probably is over, and we should switch the time frame to higher time frame, higher scale, and start watching for targets and performance that we have on a daily and 4-hour time frame chart, where actually, as we said, context stands bearish by far. This what we have on the gold, and that what we intend to keep an eye on in the next week. Also, scalp traders could keep watching for this area for scalp buy opportunity, because here maybe some minor pullback should happen. If even market fails to reverse parts at the first touch, the chance on the minor pullback still looks not bad.